But let's turn back to the major indexes now. Rebecca Walser joins me. Rebecca is the president at Walser Wealth Management. Rebecca, thank you so much for coming on the show. And we are starting to see the losses really pile up for stocks. What do investors need to know?
Well, I think that, whenever the strategy of the market is to rely on a Fed pivot to go back to sort of stimulus-based policies and low interest rates again, that we're just setting ourselves up for a disappointment. I think the chairman and a lot of the bank presidents have been very clear that this is a hawkish Fed, that they have to get inflation under control. And so every time we get a little bit of a dovish statement out of any Fed president or Powell at all, or any of the notes come out that look like, oh, maybe we'll switch and pivot, even just getting that we would have only a 50 basis point hike next week as opposed to 75 basis points we've been doing the last consecutive FOMC meetings. I think the market really is so don't fight the Fed to the extreme. And, it makes for less breadth and depth than we would like to see in the market trading just organically. So we're really tied right now, Kristen, to Fed policy. It's all about what the Fed does, and that's where we are.
Okay, so one thing that we know for certain, Rebecca, is that the Fed continually says that it's data dependent. So each bit of economic data that we get, the Fed is reportedly looking very closely at. So we've got producer price numbers coming out at the end of the week. We've got those consumer price numbers Tuesday of next week. What's your expectation as to what these reports might show and what it does mean for the Fed's policy going forward?
I would expect the trend with the PPI to continue on Friday. We saw obviously CPI and core CPI retract this past reading. And I would expect that to continue in the absence of a massive energy escalation crisis. We've seen the price of crude coming down. So I'm not expecting anything in the PPI to be alarming. I do expect a trend to that it continues to come down. But I think, Kristen, it's more about demand destruction. We have destroyed a lot of demand. And while airlines and Southwest is saying more capacity and people are still flying, and that's all great. And that's a great indicator for us. We also see that we're not seeing the retail sales as maybe necessarily we were. We see the companies pulling back on their estimates for the Christmas season. And so all of these factors together let us know that we really are in for some hard times ahead, especially globally with what's going on with the global market. We're so reliant on China. Just the Foxconn example was really alerted, I think, America to say, whoa, if they shut down factories, like Apple's quarter and their shipping is immediately impacted. For those of us in the market, we understand that, but a lot of just, lay Americans don't follow that and don't realize that until they see that on their news at night.
Okay, so let's talk about what you mean by hard times, Rebecca. Probably people have already dumped stocks at some point this year. I mean, we're toward the end of the year, and we've been moving down pretty much every day but the start of the year when we were at record highs, believe it or not.
Yeah.
But these layoffs are now starting to pile up. So how long do these hard times last, and what might it mean for layoffs at some of these companies?
Well, I think it depends on how fast it actually starts. If we're going to just do a slow drip like we have this year, I would call this year, even though the market obviously hasn't had a great year, I would still call the economic data very much of a slow moving process. It's been a slow slide, I would call it. And if we start to get more aggressive price actions, for example, with China, with their real estate market, collapsing last year with Evergrande and all of those things happening, and now with their lockdown policies easing, are we going to get actually some stabilization of supply chains? We're going to get some stabilization of the ability to support the demand that we still have, or are we still going to have some interruptions? Are we going to get another RSV or some other kind of pandemic that locks us down again? Any of these factors going wrong would be a really big problem for America. But I think just with status quo, it's going to take us 6 to 12 months additional time to really get through all of the stimulus that was put into the market in 2020 to deal with coronavirus.
Oh, I feel like that's probably how a lot of people feel, right? Just listening to that. I mean, we need the truth, Rebecca, and I know you follow the market so closely. So we appreciate the truth bombs here. I assume that this does mean that the lows have not been set for the market just yet. How much further do you think we could fall?
Well, that really depends on exactly what happens next. I mean, we could have a really bad situation. I'm not prognosticating that, and I don't want to sound hyperbolic, but if the world really, I mean, you have to also match this microeconomic stuff, Kristen, with the macroeconomic, which is the BRICS nations really moving to a multipolarity and a currency, a hard asset-backed currency system again. And they are, believe it or not, Kristen, they are pulling a lot of the world with them. Surprisingly and shockingly, a lot of these countries are moving towards the BRICS. They have the M-Bridge now. They have an alternative that they're beta testing for to combat with the SWIFT system. So if it goes to that extreme, that's going to be a huge problem for the U.S. dollar and the U.S. market. If we just talk about the slow slog that we've been having this year, then I think that we could potentially get through and get back to some level of normalcy in 6 to 12 months. But if we really see the BRICS nations pull away with hard asset-backed currencies, pushing America to really deal with the fiat problem that we have here, then we're going to have a really big problem.
Okay, so what should investors do?
Well, right now, because we're still really bearish, we really are looking at, bridge commodities. What I mean is getting us from where we are to that safety point where we're ready to just buy into the lows again at the market. We don't see that the market has reached its low. So we're looking at precious metals and other hard assets, real estate, those kinds of things that will have inherent value no matter what happens with whichever direction this market goes. We're really looking for the market to bottom out and then getting back into the deals when the market's at its low. So we're really all in the waiting game, just like all investors.
Oh, Rebecca Walser, I know it's always, not fun to talk about a bearish market that could last another year after what we've been through, but we so appreciate your take and joining us here. That's Rebecca Walser, president at Walser Wealth Management.